Good morning, everyone. So as always, we record all these meetings. We post them on our YouTube page, so that way people can go back and continue to get the fantastic updates we have from all of our awesome lenders here in the San Diego and Imperial region. So again, my name is Danny Fitzgerald. I'm the regional director for the San Diego and Imperial Small Business Development Center. We are, of course, here to be able to provide no-cost assistance, business advising, business counseling for businesses as they're growing their business. And so large part of that includes accessing capital. And we know that the capital market is ever changing. And I don't think that could be more said than today and in the past couple of years. And so we have these calls every month. Sometimes we have them live a couple of times a year, but this is really for you to be able to learn more about what's happening with the particular lending market and everything that's going on with that. So again, we thank all of our supporters for this program. That includes CDC Small Business Finance, Marble Bridge Funding, United Midwest Savings, Pacific Premier Bank, LendSpark, Primary Funding, Founders First Capital, Civic Communities, and Banner Bank. Many of those we also have on here. Also supporters of the SBDC program include US Bank, Wells Fargo, and others. And of course, we're primarily funded by the US Small Business Administration, which really does provide our charter. And so we're always happy to have a representative from our local district office from the SBA. And today we have the fantastic Lucy Montgomery. And so I'll let you take it away with a couple of quick updates, Lucy.
Thank you so much. I appreciate you, Danny, and everyone at the SBDC. And I want to thank all the lenders for this fantastic presentation, which is of significant value to our small businesses. So I'm sharing my screen now. I hope you can see it in just a moment. Perfect. At the SBA, we partner with the SBDC, but I have a little bit of updates for today. So let's get going. First, I want to talk to you about COVID EIDL repayment. COVID EIDL loans are now coming due. If you need help understanding it, please, you can contact these numbers, Disaster Customer Service at SBA. You need to set up your Capital Access account to make your payments and find out information. I have the website there and I'll add it to the chat. And I also made a small video on how to do this. Unfortunately, it's not that user-friendly, but I believe with my video, it'll be very helpful to you. Additionally, this particular Meet the Lenders is triggered towards veterans. So are you able to see my Veterans Are in Business screen? Hope so. Great. Okay. If you didn't know, the U.S. has 1.8 million veteran-owned small businesses. They generate $1 trillion in sales each year, and they employ almost 5 million workers with a payroll of $195 billion. So that's big business. In California, we have 155,000 veteran small businesses, probably the most in the nation. The reason is veterans actually make good entrepreneurs based on their previous training. They're being mission focused, problem solvers, resilient, all the things required in an entrepreneur. So we encourage at the SBA veteran-owned small businesses. But you know what? All businesses need capital. They need funding to help them get going. So I'm going to talk to you just a bit about how SBA helps with capital. Most people heard of us through COVID, but our programs are actually just a little bit different than how emergency disaster programs work. The SBA works with approved lenders, like the lenders on this call, and we provide SBA-backed loans, which is an SBA guarantee. Because the lenders have this SBA guarantee, they're able to offer competitive terms, lower down payments, and just kind of a little more counseling and education than they would with traditional loans. You can use an SBA-backed loan to purchase, renovate, or expand your facilities, inventory, grow. You can actually use it to purchase a franchise or another small business. So you want to get with your lender and match yourself to the appropriate lender for help. And why I say that is because our loans are available through lenders, not directly through the SBA. Here are some sorts of SBA loan programs. The 504 loan is a loan if you wanted to purchase your commercial property, so real estate, some large machinery as well. Then there's the micro loan over on this side. That's loans $50,000 and less, can do startups. And then our flagship program, the 7A loan. The 7A loan has community advantage loans and international trade loans under it. I put this over here in the black cloud because we never really want to have a disaster, but if there is a disaster, the SBA does lend directly with our economic injury disaster loans. And I wanted to note, because we're celebrating veterans today, that there are reduced guarantee fees for veteran loans. You need to discuss this with your lender. And the reason I say discuss with your lender, because this is how SBA loans work. You don't call us at the SBA office for a loan, you call your lender partner and they give the loan directly to the small business. You can go it alone and meet your lender and match your lender online. If you're a person who enjoys the computer and you have all of your finances in a row, you can go to our lender match website, get matched to an SBA lender. But we suggest that you increase your chances of securing a loan by making an appointment with the SBDC or another resource partner. They do great work. We find that they exponentially increase your chances of getting a loan by programs such as these, Meet the Lenders, where you can actually meet and talk to these lenders who will tell you exactly the sorts of businesses they loan to and tell you if you're ready. Here's a list of the San Diego resource partners. Because it's Veterans Small Business Week last week, we have the VBOC, we have the SBDC who sponsors this and many other seminars. You should definitely get a mentor from the SBDC. We also have SCORE and a Women's Business Center here in San Diego. Because it's Veterans Small Business Week, I just wanted to let you know that many veterans get into federal contracting because the U.S. is the biggest consumer of all goods and services. If you're interested in that, there is a veteran certification. And I just want to give a small update. The veteran-owned small business certification is now going to be done effective January 1st, 2023, directly through the SBA. Information regarding this is coming soon. No immediate action is needed if you're currently veteran-owned certified. If you're verified already by the VA, you'll have an additional certification of an additional 1 year by the SBA. So please keep that in mind, and please watch for updates, because like everything changes, and we'll get some more information on this as it goes on. But for right now, if you're certified, you should have a year to get into the new SBA system. I want to thank you for your time, and please reach out to us. I'm going to be putting that idle video and a couple of veteran updates in the chat. So please take a look at those links, and thank you for your service. And for all other businesses, non-veteran businesses, please pay close attention. We think this seminar is extremely useful for you. Thank you, Danny. Back to you.
Thanks, Lucy. Appreciate that. So it's always good to get a couple of quick updates. I do highly recommend, if you did take an economic injury disaster loan out during COVID, do get all of those updates. I know that there is, it's important to understand what all the process is for repayments and everything like that. So certainly very excited. Also, we enjoyed certainly the Veteran Small Business Week last week and continue to celebrate veterans. Of course, at the SBDC, we absolutely work with a number of different small businesses. In the past year, we helped veteran-owned businesses access nearly $31 million in capital and over $16 million in government contract awards. And we have some fantastic success stories of that. Also, of course, next Saturday is a Small Business Saturday, but certainly, as always, encourage folks to be able to celebrate small businesses all the time. I know I'm going to at least one Small Business Saturday event tomorrow, and plus something, of course, the following week, seeing some of our fantastic small businesses here in San Diego. So we'll go ahead and get started with the program here, and we have a fantastic panel of lenders. And so we'll start out with as always, just kind of allow you to introduce yourselves and talk, just who, what's your organization, and then we'll get into some of the more specifics in terms of some of the questions. So why don't we go ahead and start with you, DeWitt.
Thanks, Danny. Good morning, everyone. I'm DeWitt. I'm a SVP with Pacific Premier Bank. We're a large regional bank headquartered in Irvine with branches from San Diego all the way up to the Canadian border, a couple branches in Arizona, Nevada. We're a nationwide SBA lender, nationwide real estate lender. And with small businesses, we have products that start as small as $5,000 lines of credit, $5,000 term loans, up to $500,000. And these products, so 5K to 500K, we provide expedited underwriting, expedited approval. We try to make it really easy for a business to obtain the initial capital they need to grow. And if anyone has a business that does less than 1 million in revenue, we'll waive all fees to set up a line of credit or set up a term loan. And if anyone has any questions, just let me know. Thanks, Danny.
Fantastic. Mr. Andrew.
Yeah, good morning, Danny. Good morning, everyone. I'm Andrew Crone, Senior VP, Marble Bridge Funding Group. We're located in Northern California. We're a 24-year-old now commercial finance company, a direct lender. I've been doing it for 22 years. I do the sales and underwriting, and I'm available to anybody who has any questions after this event. And my information's in the chat. We are doing receivable finance and purchase order finance and contract finance. So we're working with businesses that provide invoices to other products for products and services to government entities or to other commercial accounts, and you got to invoice them and wait 30, 60, 90 days to get paid. We help with the cash flow. We work with startups, the companies that need up to 5 million a month as far as our capacity goes. And usually we're seeing companies between 500,000 and 20 million in revenue. And that's a short summary.
Awesome. Oscar.
Perfect. Thank you, Danny. Good morning, everyone. My name is Oscar Franco. I'm the SoCal Business Development Manager at Founders First Capital Partners. Our mission at Founders First is to solve racial and social economic equity gaps by educating, funding, and connecting growing businesses owned and operated by diverse founders nationwide. We are a national lender. We offer two main products, which is our revenue-based fund and a short-term loan. Usually the type of businesses that we work with are not in the early stage phase. Usually our businesses are between 500K, I would say, to 5 million in annual revenue. Are looking for growing capital to basically take their business to the next level. That's where we can be a great partner for them. And we also have a nonprofit side of the business, which is Founders for SBDC, where we run accelerator programs. We have 3 different ones depending on the revenue stage of the business. So basically it's very tailored for different growth stages that a company may face. We also do grants throughout the year and workshops and online webinars as well for entrepreneurs. So happy to connect with all of you and looking forward to it.
Fantastic. And Joyce.
Good morning, everybody. My name is Joyce Barra. I'm here at Accessity. We're a nonprofit market lending organization. We've been in San Diego since 1994, and now we expanded our territory to Southern California. We're also a mission lender. We're a CDFI. Our loans start up at $300 to $100,000. I'm sorry, I'm coming out of a cold. That's why I wasn't at yesterday's meeting. We're here to help out either startups or businesses that are looking to expand. Our target market are the LMI community, and we do have a special discount also for veterans. Thank you.
Tariq.
Good morning. My name is Tariq Ahadi. I'm representing US Bank. So we are currently in the process of acquiring Union Bank. We're hoping that everything will be done by the 1st of December. So that will continue to expand our presence, across California. So from our perspective, we are a preferred lending partner to the SBA. We actually have a program in place through the 7A side where we can actually do concurrent lending, which effectively means that as soon as we have a full package, it goes into underwriting, it goes into closing at the same time. So that is actually going to save customers a lot of time, a lot of pain, and obviously get the deal closed a lot quicker. So we have various divisions within US Bank. We can help them. We can help customers with equipment finance. We have a dedicated manufacturing division. So any questions, happy to answer those. Thank you.
Thank you. And speaking of mergers, well, Miriam from, I guess, still CDC Small Business Finance.
Yes. And Tariq, nice to see you, by the way. Nice to see everybody. So I'm from CDC, Small Business Finance. You're correct, Danny. We did merge about a couple of years ago, officially a year ago. But we are a nonprofit lender, and we've been around for 40 plus years. And we merged with another company that's also been around for 40 years. So that only gives us a wider, net of clients that we can help, and from startups all the way to $30 million loans. So we have a little bit more that we could offer now, which is really, really cool. But as far as in the programs that I offer, we offer loans from 20,000 to 350,000, and it can be pre-revenue, so a startup. It can be also a startup that's 6 months in, a year in, even 2 years in, could still be considered a startup. Of course, we help existing business owners that are not yet ready for traditional lenders, or any business owner that wants to acquire a business. We can help as well. It's after COVID, our guidelines have really gone down. So no collateral, no minimum credit score requirement. We're just kind of pride ourselves in doing what we call make sense lending. So if it makes sense that you could repay us, then you may be able to borrow from us, which is really cool. So I love helping small business owners because I know it does not only affect the small business owner, but it affects their family and then their employees. So therefore, our community right here in San Diego locally. I've been doing this for 20 years, and I look forward to many more years. And that's it.
Fantastic. So as you can see, some diverse array of different lenders, from traditional banks to nonprofit lenders to alternative ways to be able to look at lending. And so my next question is still kind of sticking with the overview. With some of you have touched on the loan programs you do offer. If you wanted to expand on a little bit about that, but also just really what the particular process is. What are things that really come into play, such as credit scores, years in business, collateral, etc., and what people need to do to be able to be prepared. Why don't we go ahead and start with you, Oscar?
Yeah, absolutely. So for Founders First Capital Partners, we, as I've said before, we don't work with companies at an early stage. So the minimum requirements for us would be the company needs to be in business for at least 12 months, ideally 18 months, growing positive trends. So on a month over month or year, they're basically growing at a positive trend. They don't need to be profitable, but there just needs to be a path to profitability. At least 500K in recurring annual revenue. And I would say the most important aspect of our products and what we do is that the business model has to have a recurring revenue within the business model. So usually the type of companies that we fund are in the SaaS space. So software as a service companies are a good fit for what we do. Service-based businesses are also a good fit. Even consumer packaged goods that work with retailers and receive purchase orders on a monthly basis, that's a good fit for us as well. As far as the things we take into consideration, so we solely base our investment decisions out of the company's performance. So we don't check for any personal credit score. We don't ask for any collateral. There's very limited covenants that essentially that we take into the consideration for our lending products. However, we do a very due diligent process as far as reviewing every application to making sure that the recurring revenue aspect is there. So I would say those are primarily the main things. Some of the two things as far as that we can offer is, one, there's the revenue based fund as I've shared, and we also recently launched our short-term loan. And if I'm being honest, completely transparent, the reason why we launched this is usually revenue-based financing on a monthly basis. There's a royalty fee that's how you pay your loan. What we end up finding is that sometimes for SaaS companies that they're basically growing like crazy month over month, it doesn't make sense for them to continue to increase their payment on a monthly basis. So what we end up doing was doing a short-term fixed payment on a monthly basis, and now that is also available as part of our products here at Founders First. We do work a lot with diverse founders. I would say 95% of our portfolio is diverse. So BIPOC, military-owned businesses, women businesses, companies doing business in the low to moderate income area are, I would say, 95% of our portfolio. And there's a small percentage as well for non-diverse founders in there as well.
Thanks, Oscar. And Tariq.
Oh, sorry. Yeah. So from our perspective, as I mentioned, we have many different divisions within US Bank. So from the SBA side, we work with clients that are looking to purchase buildings. We can help with mergers and acquisitions. We can do partner buy-ins, partner buyouts. And then on the sort of equipment finance side, clients that are looking to purchase small pieces of equipment, we can get those done up to $1 million. And then within our manufacturing vendor services, one-page application, and then they can get approved up to $750,000. I don't think there's any other bank that kind of offers that. And right now, I think we've mentioned it on one of the previous presentations. It's coming to the end of the year. The Section 179 allowances are all changing, moving into 2023. So it's very, very important that, if you're a business owner, that if you haven't had a conversation with your CPA or your bookkeeper, that you've fully taken advantage of that allowance, because it will not be to your benefit. Unfortunately, it will be to your detriment moving into 2023. Typically, from our perspective, our sort of minimum FICO score is around 660. And we, on the SBA side, we can cash flow deals. We can do deals with at least a year's worth of financials. So yeah, happy to answer any other questions that you guys have.
Awesome. Thank you. And Miriam.
Hi. So what we offer is, as I had mentioned, for startup companies, we offer loans from $20,000 to $350,000, and they can be in the startup phase, existing, or acquisition phase. Our rates kind of vary per program. So we have some micro loans that are from $20,000 to $50,000. Those are actually a fixed interest rate at 7.75%, which is amazing right now. And then we have our typical SBA Community Advantage loan. And that one is from $20,000 to $350,000. And that loan product is on a 10-year term. None of our loans have a prepayment penalty. That one is a variable loan, but it's a little bit larger for larger projects like, opening a salon or opening a restaurant or so forth. And then we also have another loan program. If you're not a citizen of the United States, or maybe you're not naturalized, but you have a working visa, then we have another loan program that may be able to assist you up to $350,000 as well. And so, like I had mentioned before, some of the things that changed in our guidelines recently is that we don't have a minimum credit score requirement. We're still looking at your credit, and in some judgments, depending on if it's a tax lien or there, we can chat about it, but you can still have and still apply and get a loan with us. So we've become a lot more lenient. And we don't collateralize, so you don't have to collateralize your home or your vehicle or anything of that sort, which is really nice. And then with, us having the merger, as Danny had mentioned, we are able to offer a lot of other loan programs. So typically we've always offered the 504 loan product, which partners with somebody like Tariq at US Bank, where they do like the first portion of the loan of 40% to purchase commercial real estate. And then we do, they do 50, we do 40, and then the borrower comes in with 10%. So we still are offering that product. But in addition to that, we have another product that helps small business owners that maybe don't have 10% injection to purchase commercial real estate, but they only have 5%. So we have, and that's our own product, and it's 95% financing to purchase your first real estate. It's a little bit like a starter before you can actually qualify for the 504. So it only goes up to 2 million, but it certainly could still, purchase you your first, commercial real estate. In addition to that, we have a new investments team. So if there's somebody who wants to acquire a loan, a business that is $1 million, $2 million plus, that doesn't typically fit in our bucket, I can refer you internally to do that as well. So a lot of different products, but we're mission oriented, we're a nonprofit, and our goal is really to help you. Of course, we help anybody who's in the startup phase, but if you're African American, Hispanic, if you're in the low or moderate income area, if you're a woman business owner, anybody that might have had any barriers to lending, we are willing to make exceptions to hopefully either grow your business or get your foot in the door to start your business.
Fantastic. So same questions to you, Andrew, just kind of the general overview.
Yeah, as far as working with particular clients that come in here, we work very, very quickly. Among the group here, we probably have the easiest underwriting standards, speed to funding. If I had a full package in hand of what I need and you understand our program and understand your business, and we go forward, we would have you funded in under 10 working days if you're next in line, depending on our workload and how much is going on. And we are seeing a tremendous increase in demand, as I would have expected as we go into this type of economy. Receivable finance. So if you're a cash-based business, I can't help you. It's not my spot. Mary might be a great place to run in that example, but among some of the others here. But for our end, the companies are coming to us, are offering products and services. The governments, we had somebody just win a $29 million contract with the CHP. It was referred our way to one of the nonprofit lenders. They're going to give them $350,000 and a SBA program, and they also work with us. So we're going to provide them with the receivable finance so they can make payroll and grow. As a package, I will ask for financials. They don't have to be CPA audited like a lot of banks look for, but I ask for financials, tax returns, articles of incorporation, receivable and payables, and just the usual stuff, bank statements. We're going to look at all that, and we're going to go over your programs. I'm going to be able to give you a little bit more than just financing. I offer some advice if I see things to make your business stronger. If I see you're bankable, I'm going to let you know that and tell you which banks to run to. So I will give you a lot of good, solid advice. And, simple package, we get you in. Once you're ready to go and we're ready to go and on your way, no minimum funding requirement, and we can fund up to $5 million a month. So it isn't like you're getting approved for $100,000, you outgrow it. You can be with us as fast as you can grow the business, as fast as we can fund it. With 22 years experience, I will teach you all the trade secrets and how to get the most for bang for your buck to grow the fastest that you can grow using us. That's it.
Fantastic. And DeWitt.
All right, so we have credit products that start as small as 5,000, and our legal lending limit is north of 125 million. So literally every stage of a business's development, whether it's your first line of credit, whether it's trying to get a larger line of credit, whether it's getting a $10 million acquisition loan to buy another company, I can help you with all of those different scenarios. The uses for lines of credit or term loans could be things like, we got a contract, we need to hire more people, we don't know how we're going to make payroll. Okay, well, that could be used or could use a line of credit to cover that. Or it could be, we're growing our sales so quickly that we're running into a cash crunch where we have receivables, but we don't have money to make payables. That could also be something that a line of credit could help with. Term loans that we offer could cover uses from everything like buying equipment, buying inventory, buying materials, or it could also be a term loan to acquire another business or a term loan to open a new location. Typically, the minimum time that you need to be in business is 2 years. And 2 years, let's say you were a sole proprietor 5 years ago, you've had a sole proprietor business for 5 years, and you just incorporated in 2021. We would consider that you've been in business for that full 5 or 6 year period. We wouldn't say, oh, you just incorporated last year, too early, you don't have a track record. So if anyone previously operated as a sole prop and just formed an LLC this year, or just formed a corporation this year, we would count that full track record as your time in business. So it's not necessarily when you incorporated, it's when you started whatever the business is. So minimum of 2 years in business. And then with credit, for whether it's a line of credit or a term loan up to 500,000, we provide expedited approvals, expedited underwriting, and it really is very transparent how we're going to approve or decline your application. So literally, if you're applying up to 500,000, we'll make a credit decision in typically 1 to 2 weeks. You have to have a 680 credit score if you want a line of credit or a term loan that's above 100,000. And then it's a lower credit score if you want a term loan or a line of credit less than 100,000. So more than 100,000, you've got a 680 credit score, you've got at least a 2-year track record, and you've got profitability. So your business is generating net income. As far as what the docs that I would require up to 500K, well, let me start up to 50K. So up to 50K, it's a 2-page application. So if you want to apply for 5,000, 25,000, 50,000, it's a 2-page application. We pull your credit report. As long as there's no red flags, you shouldn't have an issue getting up to 50,000. And up to 50,000 does not require profitability. So it's a really good start if this is your first line of credit or your first term loan, basically your first borrowing from a bank for the business. So if you want, that initial line of credit, you just started 2 years ago, your business is breaking even, and you feel like you've got a really good plan to grow it, to expand, you're going to be profitable next year, but you need just a little bit of extra capital, up to 50K. That we could consider with a 1-page application, a 680 credit score, and you don't even need to be profitable. Let's say it's something where you want a larger amount. Let's say you want 100,000 to 500,000. That would be a 2-page application, your most recent business tax return, and year-to-date financials. We do offer loans, as I mentioned earlier, up to 125 million or more. And those loans are fully underwritten, which simply means we're looking at everything: 3 years of business taxes, 3 years of personal taxes, 3 years of business financials, year-to-date financials, personal financial statement. The only red flags with us or automatic disqualifiers are going to be bankruptcies that haven't been discharged or bankruptcies that are fairly recent. Recent charge-offs, that would also be a disqualifier. But aside from that, there's no industries except illicit ones that are disqualifiers with me. So, cash-based businesses we'll look at, retail businesses we'll look at, home-based businesses we'll look at, online businesses we'll look at. So whatever it might be, we probably have something that'll be a fit, as long as you've got that 2-year track record, pretty good credit score, and profitability. Or if you're only looking for up to 50K, 2-year track record, and 680 credit score. And that's it for me, Daniel. Thank you.
Thanks, DeWitt. And Joyce, to you. So just kind of an overview of Accessity's process and what you're looking for.
Absolutely. So we have 2 loan programs. Our first one, it goes from $300 to $25,000, our rapid loan. We just started offering our rapid loans up to $25,000. And then depending how fast you get the documentation to us, we can do that loan in about 2 weeks. And then we have for our regular loans, they go from $25,000 to $100,000. Our interest rates start at 6.99 to 14.99, which are pretty good right nowadays. We help businesses pre-revenue, so we help a lot of startup businesses. And for our startups, we're going to require a business plan, projections. Those are two key things. We're going to take a look at all the overall strength of the loan. We are going to look for a source of income. So please don't quit your day job. Please, I know I get a lot of people that want to start a business and they want to quit their jobs. Please don't do that, because that way you're not going to be bankable with us. We're not going to be able to approve the loan. We want to get a loan to help you grow your business if you're an existing business. So we want to be here to help you out grow your business. Our process is pretty, it's not that doesn't take that long. As long as you send all the documents, your loan should be done about 3 weeks after all documentation should have been done. We're going to require 2 years worth of taxes, 3 months worth of bank statements, ID, of course, proof of entity, your profit and loss if you're an existing business, also your balance sheet. So we're going to take a look at basically the overstrung loan. We're going to see if we're going to be able to approve you for our loan. You can give me a call. I left my information in the chat. Just give me a call. We can talk to each other. We can see if you're ready. If you're ready, I'll be ready to qualify you, to invite you to apply for our loan. Thank you so much.
Thanks, Joyce. So, that's just kind of a general overview. And really, that's a lot of what we wanted to be able to talk about and introduce everybody to a variety of different lenders. And I think that's one of the critical messages is depending what type of business you are, where how long you've been in business, the size of your business, et cetera. There's a lot of different options. And that's a lot of what we do here at the SBDC is kind of help you understand really where your business is from a third party. We don't sell anything. We have no interest. You're not paying us. The banks aren't paying us. And so we're really here to kind of help you evaluate that in a free, confidential way to really help you match up with the correct lender for your current situation. But of course, one of the big factors that's certainly coming up or certainly has been happening is the ever-changing capital market. We certainly, Tariq talked about a couple of things that are kind of changing or winding down already for 2022 and forecasting for 2023. And of course, we've already seen the ever increasing of prime, which is certainly impacting really what is happening with loans and things to understand. And so the next question is kind of for you all is really looking at kind of some general forecasting for 2023 and also as things are particularly closing out for 2022, what are some things that the businesses really need to be taking into consideration? Why don't we go ahead and start with you, Andrew?
Okay.
It's a lot, I know.
Where to begin? So closing out 2022 at our end, we've been swamped. I'm writing every week. There is a tremendous need. A lot of this is with younger businesses, startup businesses, people who work for other people have now gone out on their own. And I expect that trend to continue into 2023. As you can see in the news on a daily basis, there's a lot of layoffs taking place now at technology companies and others. That's probably going to accelerate next year as the Federal Reserve has done their thing to slow down the economy. That generally raises unemployment. And when that happens, a lot of people decide to go out on their own. And so I've been through this cycle. I've been doing it 22 years, so I know what's coming. We're going to see a lot more entrepreneurial people coming into play. The SBDC, for those in the office, you are online, you should be talking to them because this is the place to go. It's all free. They have so much information for you that can really help you grow. On the lending side, if you're going to be a receivable-based business, or you are one right now and it's growing, you want to talk to us, we can help you double, triple, grow 5 times in 1 year if you can get the business. I have many, many success stories of doing it. But going into next year, the other thing to keep in mind if you're going to do a business is how to protect yourself against inflation. Even though it shows some signs of slowing down right now, if the US dollar weakens a lot going into the next year, then by mid-year, inflation is going to come back again, roaring back again. It's very difficult to get rid of inflation in a very short period of time. So when you look at your business models, you got to make sure how are you going to be able to pass on the labor costs and the material costs to your clients. So if you have large contracts that are locked in, you might be in danger if you have to start producing or delivering mid-year, things might double in price. How are you going to handle that? And you have to grow your business in this environment because if costs are going up, you got to make more money, have more revenue in order to produce the same amount of income, or you have to get smarter and sharper and cut overhead to achieve the same goal. So it's a challenging environment when you have inflation. From our end, we are set. We have the funds. We don't put you in a box and say you've been approved for 100,000. If you can grow to millions, we can fund you as fast as you can grow. You could be with us as long as you like before you transition to one of the other lenders or the bankers in the room. And sometimes we have partners on screen today that we can work with, and sometimes you can get more money from more than one of us. And so I have several loans in process right now that are with nonprofit lenders that are partnering up with us, and we're getting deals done that way to get the clients more money to achieve the goals that they're setting out to do and to grow the business even faster. So that's sort of my prediction.
No, and that's critical. And I think a lot, especially with the type of lending that you do, the inflationary pressures are critical to be taking into account. Joyce, what about you?
Okay, and for our organization, especially the type of clients that I get, I'm seeing a lot more home businesses being created right now. As you've been talking, a lot of people have been quitting their jobs and wanting to go on their own. And I've been seeing a lot of more home businesses grow. But what I can tell people is please, like I think was DeWitt was talking about, I would say make sure you know your numbers. Make sure you know your strengths and how you can keep your business going and growing. So know your numbers. Keep a touch on that because a lot of my clients I've seen like they don't know quite what the numbers are at the moment. I always make sure they have a good accountant so they can remind them of what they need to know when they need to pay their taxes and how much they're projecting their growth. Thank you.
Thanks, Joyce. And DeWitt, I know you've always got a shined up crystal ball.
Well, right now it's a little cloudy and has a couple cracks in it, but I'm pretty optimistic for next year. I recently did a little year-end survey of all of my clients to ask them like, what are their biggest challenges for 2023? What are the biggest opportunities they see for 2023? And found some really interesting findings. And I thought going into this that the biggest challenges would be interest rates and maybe second to that, inflation. But the vast majority of my clients said their biggest challenges right now are still supply shortages and even more so labor shortages. That probably will continue going into next year. The other interesting thing that my clients said is their biggest opportunities, first and foremost, is expanding market share. Second to that is buying another business or acquiring another company, followed by buying owner-occupied real estate for their business. And I was kind of shocked that buying real estate or buying another business were two of the biggest opportunities that business clients are seeing for next year. This environment that we're in right now, it's definitely an environment that fosters consolidation. In other words, if you've got 10 companies that are all in the same industry, they're all producing the same widget, but you've got a couple that are really, really strong, and you've got a few that aren't as strong. This environment, those strong ones, they're going to be able to get capital. They're going to be able to borrow money from banks. The weaker ones are not. So the stronger ones are going to borrow money from banks, get loans to buy out and acquire all of these smaller companies that aren't quite as strong. We have seen a significant pullback in real estate transactions, primarily due to interest rates and the lack of inventory out there. But that could probably turn around maybe like midway through next year or late Q1 as you start to see long-term rates come down. The thing that I would also offer to everyone as far as, if you're thinking about starting a business or you've recently started a business and you're anxious, you're worried, everyone's talking about recession, think about this. The companies that start and open their doors, or the business owners that start a new company, when the economy is firing on all cylinders, when it's easy to make money, those are the ones that typically don't do very well when there's a recession, because they haven't thought about things like, well, how do I manage my expenses? How do I improve my financials? How do I focus on profitability and not so much on revenue? But the companies that start in a cycle like we're in now, man, once the cycle is over, your company is going to be thriving because you're probably going to focus even more so on things like, well, how do I manage those expenses? Like, it's a recession or whatever you want to call it. How do I manage my expenses so that I'm not overspending? How do I not borrow as much money, but focus more on accelerating my cash flow, collecting money from people faster, paying my payables a little bit slower so I don't need to borrow as much from the bank? If you can focus on those things now, once we're out of this cycle, your company is going to be a lean, mean money-making machine. So focus on profitability. Don't worry about growing your business to be as big as possible. Focus on growing your business to be as profitable as possible. Because I personally would much rather work with a company that's doing $1 million in sales and 200,000 in net income, rather than a company that's doing 5 million in sales and 50K in net income. I would rather work with the more profitable ones that might even be smaller when measured by revenue. Lending, you know, we're still doing a ton of business lending. The types of lending that I've seen the most over the past month or two are things like increasing lines of credit for business clients, new lines of credit for business clients that previously didn't have a line of credit, a lot of equipment financing. So all of these companies that were profitable in 2022, a lot of them have set up what's called drawdown equipment lines of credit, which is basically a line of credit that is interest only for a period of time, maybe 12 months. And then at the end of that period, it automatically converts to a term loan. So if you've booked a lot of profit for this year and you're thinking, how do I minimize my taxes? A drawdown equipment line of credit could be a great solution because it gives you a defined borrowing cost, but it allows you to also buy new equipment, book all of the depreciation on it, dispose of old equipment, and kind of could be used as a tax minimization strategy. That's it for me. That's the crystal ball. A little cloudy, couple cracks, but I think we're all going to be pretty good next year.
Well, fantastic. Thanks, DeWitt. And Miriam, what are you looking at for 2023?
Well, you know, in my experience, because I've been doing this for 20 years, you know, when I worked at the traditional banks, this was, you know, definitely a time that the credit box and guidelines, you know, shrank. And but now that I'm on the other side and I'm, you know, with what's considered an alternative lender, we're a nonprofit lender. Recession time is a busy time for us because we do loans that are outside of the box. Our guidelines are much less conservative than a bank and other traditional lenders. So, you know, and even our company ourselves, you know, our merge and being, you know, Momentous now, we're a CDFI and we're a CDC, and it's just like we're here for a moment like this per se. So we have a lot of exciting things happening. I'm actually on the team that's creating a line of credit that's going to come out next year, which clients have been asking me forever. We're also coming up with a credit card that's just for maybe startup clients that just need $5,000, you know, or existing businesses that maybe need a credit card for $50,000. So, you know, like I said, we are hiring like, you know, 6 people a week. We're growing like crazy. And so then our products are growing as well. And we haven't officially, you know, put it on our website. So we only have that we lend in California, Nevada, and Arizona. But definitely ask me, and this isn't more for SBDC or other referral partners here on the call, because we are already in about 15 states. So, you know, if you have somebody from another state, you know, Tennessee or Minnesota or Michigan, I may be able to help them as well. Texas, a lot of different states that we're helping as well. So, like I said, you know, we were positioned, you know, it's not like, you know, we did it on purpose, but, you know, recession is happening, and that is not something that scares us at CDC Small Business Finance, at Momentous. We are, you know, ready for it, you know, got a lot of funding from the government, and we're ready to deploy it. And we are hiring new loan officers. So, yeah, you know, we're very open now to a lot of different products too. So if we can't help you, obviously I'll refer you to someone on the panel here, but yeah, feel free to reach out. My information is on the chat box. You can schedule, instead of playing, you know, phone tag with the phone call, you can go ahead and schedule a call if you're interested on my link.
Awesome. And Tariq, I know you talked about a couple of things already earlier, in particular about Section 179. What are some other, you know, key things as we close out 2022 and look to 2023?
I'm a little bit more optimistic in regards to the economy. So obviously, from my perspective, probably similar to Miriam, this is going to go into my 4th recession. So, and originally, as I'm sure you guys could tell, I'm from England. So, you know, went through the 1987 one, which was the Black Monday, and then the 2000, and then the 2007, and then obviously now kind of going into this one. But look, the bottom line of it is, you know, business happens. You know, Jewett touched upon it previously. specifically around, businesses that thrive when there is a downturn. The bottom line of it is people are going to buy buildings, people are going to get financing irrelevant of what the market conditions are. What you're seeing right now is an adjustment. For 18, 19 years, the whole world has had relatively cheap money. So there has, an adjustment has been needed for a long time. Of course, it's going to, affect the bottom line for everybody kind of involved. But when you come across a client, that potentially is paying $7,000 a month, to rent the space, and then the landlord or landlady turns around and says, actually, I'm going to bump you up to 10,000. From their perspective, they have to kind of look at it and think, actually, maybe I pay another $1,000 extra and then I buy something versus, being at the mercy of my rent potentially going up again. And obviously, when you purchase something, there's a lot more that your bookkeeper and your CPA can play with when it comes to depreciation and that kind of stuff. Certainly from my side, I feel that the adjustment has been needed for a period of time. But business owners will continue to thrive. And certainly from all of us, as banks and as sort of private lenders, we're here to assist, and kind of get you guys going. If you've already set up your businesses, great. And if you haven't, then it's now's the perfect time.
Awesome. Thank you very much. And last but not least, Oscar.
Absolutely. So I've been taking notes so far, and I have to say I have to agree with everything that has been shared so far. So a little backstory about me: I used to work at another nonprofit that supported high impact entrepreneurs around the world. So to your point, Tariq and Dewitt, they do a lot of papers, specifically in terms of recessions in different countries around the world, and the impact that those recession has on entrepreneurs. And they have found out that there's none. The reality is entrepreneurship, it's always I would say adverse to recessions. There's a great opportunity. There's great success stories, such as in Argentina, Mercado Libre, which is a company that right now is one of the best performing stocks in the New York Stock Exchange out of Latin America. That company was funded in the middle of the biggest recession in Argentina. So the truth is, businesses are going to continue to get funding regardless of what the economic uncertainty might be. So I have to agree with everything that has been shared so far. The other thing, Andrew, what you share about more entrepreneurs, I cannot tell you how many calls I've had in the last couple of months of people with outstanding profiles that were recently laid off. They were about to start a business, and the truth is there was going to be a lot of more of that. And I would say just one last thing that I think is very important. Also, when there's a lot of uncertainty in the economy, I would say just be aware of predatory lending, and a good way to avoid that is the SBDC here with Daniel, right? I'm sure they have a lot of resources, coaches, mentors that can point you in the right direction. I've been doing a lot of deals so far there's a lot of debt consolidation as well. So just make sure that you have someone in there that can help you out, point you in the right direction. And I think the SBDC can be a great resource for that. I know we're running a little bit late on time. I have a lot of other comments in here, but I don't want to be repetitive, but I have to say I agree with everything. Just be aware of predatory lending out there.
Absolutely. And so I think that's a good segue, because the last question I'm going to ask is just one or two tips from each of you. And I think Oscar just absolutely talked about one, which is to beware of predatory lending. That's why we have these calls. That's why the SBA has some of their programs, our fellow resource partners. There's so many good lenders that are out there, but you do have to be careful of a lot of predatory lenders that are out there, and really be careful with that. So we'll move into kind of my last question, one or two tips that you'd leave with some small businesses as as they're looking to access capital. And why don't we go ahead and start with you, Miriam?
Okay, yeah. So my biggest tip, I think, right now would be, we're coming towards the end of the year. So as you think about doing your taxes for next year, if you're considering getting a loan, talk to your CPA. Because there's a lot of different things that your CPA can do, even take, certain losses a different year, whatever it might be. And so let your CPA know that that you're looking to get a loan, because A lot of times as a business owner, you're thinking about, okay, how many deductions can I get? Because I don't want to give all my money to the IRS. That being said, you also cannot get a loan if you can't prove that you have the cash flow or the ability to repay the loan that you're requesting and continue to run your business, right? So that it's just logic. And so, it's great if you don't pay any taxes and your business looks unprofitable, even though it is, but it's not going to get you a loan. So talk to your CPA, tell them, hey, I'm looking to get a loan. What can we do? Have good conversations with them. I'm always happy to, have a conversation about that as well. But, if you're looking to get a loan now, that's totally fine too. But my biggest advice is it's almost end of the year. So that's something that's, definitely my number one advice. My other advice is for you to be honest. SBDC, I've worked with so many different clients, and we've partnered together in different things, from projections to business plans, and even confronting certain things like, oh my goodness, I have a tax lien. But if you come to me, or if you come to the SBDC and you're not 100% honest, trust me, I cannot tell you how many, not just your credit report, but how many reports we run on you free, even just with your first application, and then there's more at the end before funding. So we will find out if there's a bankruptcy, if there's a charge off, if you're a criminal. Like, we will find out everything. So if there's anything that you need to share with us, just remember that we are a resource. SBDC, all the lenders on this panel, we all care about you and your business. So let us know where you're at, and if we can't help you, we will refer you someone else. And SBDC is great about that. They know a lot of people that lend that are reputable, and they will definitely send you our direction if you're a good fit.
Awesome. What about you, Andrew?
Yeah, I would say two things. Always first, work with SBDC. No matter what your business is, no matter how many years you've been in business, they're consultants. They have so many different types of consultants. They can find you somebody to get value, to help you learn more about what you're doing right, what you're doing wrong. Secondly, when you are looking for funding, this panel is really a premier panel of people with a huge amount of experience. Talk to everybody on the panel when you go looking. Get to know what they can do and what they can't do. Tell them what you're doing. And usually within 5 to 10 minutes, they'll be able to guide you, saying, yes, they're the right fit, or maybe they're not the right fit. Or, we all refer back and forth to each other, which makes us a great panel as well. We've all known each other for a while. So anything that we can do to help, anything I can do to help. But I think honesty, when you're coming into a lender, yes, they will. And Marion said it, we will find everything. So, when we ask questions, listen to the questions and give your best and honest answer. And a lot of times we're able to tell you things you normally wouldn't hear from other lenders because of the nature of who we are. And so you will gain a huge amount of information if you're looking for funding. As an example, if you walk in to a bank and you said, I just started my business yesterday, I need a $500,000 loan, it's not going to happen. And so you could talk to people here about what your thoughts are, what you're trying to achieve, and get prepared ahead of time. The SBDC could help you, or we will help you as well. We're all working together for your betterment, and we want you to be successful, especially going into 2023.
Awesome. Thanks, Andrew. And Tariq, 1 or 2 tips.
I think it's already been covered off, hasn't it? Be honest, be honest. And obviously from your own perspective, just work with the SBDC. I have a very close relationship with Miriam. So, when I get a client that perhaps doesn't fit our box, or is new and needs assistance, then, she's the first person I'm calling. She's great. She handles the client, with the utmost respect, and kind of gets them through and gets them almost bankable to a point. So, definitely leverage the resources of the, expertise that you have on this panel. I hope everyone has a happy Thanksgiving. Thank you for taking the time to join today.
Thanks, Tariq. And Oscar.
Thank you, Daniel. Number one, I would say reach out to the SBDC. They have a lot of resources, consultants. They can point you in the right direction. So, and also they can make referrals for you as well. So I think working with the SBDC is crucial. I would say for all of you guys joining in here. Another thing would be that I would definitely recommend is us lenders, whether it's lenders or equity investors, we do a lot of research on you guys. I will definitely encourage you to do the same. So do your due diligence process, talk to different lenders, ask for different feedback. I've got entrepreneurs that reach out to me when we're discussing a potential loan opportunity, and they ask for success stories. Hey, what other companies like in the same industry have you funded in the past? So things like that. I will definitely recommend you doing. It gives you like a perspective of a big picture of the opportunities that the lenders have previously worked with, and it could get you a right idea as well if the lender might be a good fit for you. So I will definitely recommend that. And I will say lastly, as Miriam and Tariq mentioned, honesty. We will eventually find out, but we'll get access to your financial information. So anything that is sort of like in between the lines or quote unquote hidden, we'll eventually find out. So honesty and transparency is very important, and also for building the relationship with your lender as well.
Fantastic. And Joyce.
Absolutely. Especially if you're a startup, please check your credit, because I know there's some surprises in there that you may not have known about it. So please check your credit report carefully, know what's in there. So if you have a collections or a charge off, please take care before you speak to the lender. That way you won't have those issues. And the other thing is make sure you have a strong business plan. Work closely with the SBDC. I send a lot of my clients there because I want to make sure they have an understanding how they're going to start their business, how they're going to run their businesses, how much money they really need for our loan. So when you come to me, you'll be able, hey, Joyce, this is my credit report, and this is my credit score, and this is what I want to use the funds for, and this is what I plan to do with my business. So make sure you have a tight business plan, and make sure you speak to your business consultant, your business counselor that can help you establish that. Thank you.
Fantastic. And last but not least, DeWitt.
Well, I think everyone pretty much summed it up. So I'll just kind of reiterate the three things that I've heard from everyone that I totally agree with. First one, honesty. You know, you got to be honest with the lender, disclose everything. I would also say whatever the challenges are that you have personally in getting a loan, tell the lender before you tell them how good your company is. So, you know, tell the lender, hey, I lost money last year in my business, but this year is looking great. What can you do for me? Or I had a bankruptcy or a foreclosure in 2009. It's been discharged. I've built my credit back. What can you do with me? So highlight the challenges, let the lender know what they're getting into, have good financials. And lastly, talk to the SBDC first. As everyone mentioned, everyone on the panel, we all work together. We all know each other. So reach out to the SBDC, find out, you know, which lender might be the best fit for you, and you should have a really good experience. That's it for me. Thank you, Danny.
Awesome. And thank you very much to all our panelists, Tariq, who had to drop off, Miriam, Joyce, Oscar, Andrew, and DeWitt. And thank you, of course, also to Lucy, who was at the beginning. So you all have a wonderful weekend, and happy Thanksgiving.
Happy Thanksgiving,
Happy
everyone.
Happy Thanksgiving.
Take care, guys.